Hello and welcome everyone. Welcome to the 2022 Open Enrollment webinar for Onboard. Today we're going to spend a few minutes talking through the major medical plan options for the 2022 plan year. We're going to spend some time first walking through high level some of the most important terms to look through whenever you're making a plan election. We'll talk about some of the health coverage terms that are confusing to all of us. We'll talk about each medical plan that's offered. We'll spend some time talking about how to navigate each plan, how to ensure we're going to in-network providers whenever possible. We'll talk about the pharmacy benefits. Then we'll spend some time talking through some of the additional benefits that Onboard has embedded within the major medical plans to help improve the member experience. And then lastly, we'll spend some time talking about the member portal, ensuring that everyone is clear with how to access your benefits online, how to track your deductible, your out-of-pockets, and check any of your plan info. So to get started, before we jump into each plan, I wanted to spend just a few minutes talking about some of the most important pieces of open enrollment. So open enrollment is the time for you to make a plan election. If you're eligible to enroll, this is the time to do it. If throughout the plan year you wanted to add a spouse or a dependent, during open enrollment is your time to make those changes. If you want to make a plan decision, a change from where you're at today, you also have the ability to do that during open enrollment. Any changes that you make during this open enrollment period will be effective on January 1st of 2022. Who's eligible? Onboard has provided eligibility status for anybody who at least works 30 hours per week on average. In addition to that, your legal spouse or your dependents would also qualify. The open enrollment period is going to take place from Monday, October 18th through Friday, November 12th, 2021. And your benefit elections will be effective on January 1st of 2022. Next, let's spend just a minute or two talking through some of the most important health insurance terms. Most of us have seen these terms before, but they can be confusing to everybody. I've been doing this for more than 10 years. This is still confusing to me. So we'll talk through each of these but prior to us walking through each plan, just to make sure that some of these terms are a little clearer for everybody. Let's start with premiums. Premiums, you may also have heard the term employee contribution. That's really just the amount you pay out of every pay period, depending on the plan and the tier of coverage that you elect. So we're going to talk through a number of different medical plan options today, depending on the plan that you elect and whether you're in employee-only coverage or employee plus spouse or employee children or family coverage will dictate what those premiums look like, the amount you pay out of every pay period. And we've illustrated that by plan as we talk through this plan overview. Deductibles. Certain plans do have deductibles that apply. A deductible is the amount that you pay up front for healthcare, and that's set each year. It resets each year, so if you've accrued any deductible credit throughout 2021 and we're heading into 2022, once it hits January 1st, it goes back to zero and you have to re-meet your deductible. The deductibles don't necessarily apply to every benefit. Talk about that when we talk through each plan. Deductibles apply in certain scenarios, but not all. Copays. So for certain plans, there is a copay arrangement. Copay is a pretty easy one to remember. Copays typically come into place for certain benefits. Pharmacy benefits, for example, are one that's common where you see copays being assessed. It's not true in every plan, but in many plans there may be a copay arrangement. When you pay a copay, typically it's just a flat dollar amount. You pay that flat dollar amount and then you're done. Now that can vary depending on the plan, what that copay amount is and when it's applied, and we'll talk about that as we get into each plan. Coinsurance. So coinsurance is a varying amount. It's a percentage that you pay after your deductible is met. So if you do have a plan that has a deductible and a specific benefit you're going in for happens to have that deductible assessed, once that deductible is met, then the plan will pay at coinsurance. It's a percentage that the plan pays, and then there's a percentage that you pay. Also varies by plan, and something we'll look at for each plan that we talk about today. And then lastly, out-of-pocket maximum. This is probably the easiest term to remember. It's exactly as it sounds. When you pay your deductible amounts, when you pay your copays, if you have coinsurance after your deductible is met, everything tracks to that out-of-pocket maximum. Once you meet your out-of-pocket maximum for that plan year, you're done. The plan then covers charges at 100%, in most cases, as long as you're in network, for any benefit that's covered under the plan. Now, you have to ensure you're still having services done that are covered under your health plan, but as long as you are, if you've met your out-of-pocket maximum, the plan covers everything. One important note we have here at the bottom: what doesn't track to your out-of-pocket maximum? Your monthly premiums, so the amount you pay out of each pay period, employee contributions that we talked about first, anything that's balance billed. So we'll talk about some of the different plans that are offered. If you go in versus out of network, balance billing is possible. That's where a provider, a physician's office, may not accept the plan payment in full. If they balance bill you, that may not track towards your out-of-pocket maximum. And then any healthcare services that the plan doesn't cover. Of course, if you go in for a service that a health plan doesn't cover, it does not track. It's not a covered benefit. It does not track to your out-of-pocket maximum. So we're going to spend some time talking through each plan that's being offered this year. What we've prepared are high-level one-page overviews for each plan. This is by no means the full extent of the coverage for most of the plans we talk about. This is really designed to really illustrate high-level each benefit offering and really show us the benefits that we look to first when we're making a plan election. So we'll start with the network-based MEC Blue plan. For those of you that are already on plans today, this plan may be familiar for you, but this plan was designed to be a very low-cost, affordable plan option. It's not as robust of a plan from a coverage standpoint as some of the other options that Onboard offers, but it's really designed to at least offer some level of benefits to everyone who maybe you're not covered under a plan today, maybe you need a very affordable plan, you don't use the doctor that often. This is a good starting base plan. And so the employee contributions on a bi-weekly basis are illustrated here. You can see it's a very low-cost plan. It uses the multi-plan network. Multi-plan is a national network. It has no deductible. Preventive services, routine preventive care, is covered at 100%, so you pay nothing for any routine preventive care. That would include annual physicals, well child exams, women's annual exams, immunizations, screenings, tests, anything that's coded as routine preventive care would fall under this benefit. The best way to ensure that you're not caught off guard with a bill you weren't anticipating if you're going in for an annual physical is just to confirm with the physician's office. They can tell you in advance of service anything that they're doing during that visit is not being billed as routine preventive care. If you have a diagnosis, for an example, let's say in the past maybe you've been treated for high blood pressure or high cholesterol, and you go in for that annual physical and they want to run lab work specific to that condition, well, if there's a diagnosis associated with it, that could fall outside of preventive care. So you just want to make sure you know that up front. It doesn't mean it wouldn't be covered, but it may not be covered at 100% where you pay nothing. Teladoc is also an embedded service within the MEC Blue plan. Teladoc is a telemedicine service, which, again, exactly as it sounds, gives you access to licensed medical doctors 24 hours a day, 7 days a week from anywhere in the country. If you use that service, there is no visit limit and there is no fee. It's completely free to use, and you're talking to real medical doctors. If you elect this plan, the number for Teladoc is on the back of every ID card. I would encourage everybody to take advantage of it. It's really designed to be useful for more common ailments. You know, if you have a cough or cold, you suspect COVID, bronchitis, allergies, anything that maybe you would traditionally go to an urgent care for. If it's appropriate to see a physician virtually for it, you can do that and pay nothing. They do have the ability to call in prescriptions on your behalf. These are real medical doctors. Keep in mind, though, that the prescription benefit, if they do get a drug called in, it would not fall under the free consult model. The free consult is specifically just for your consultation with the provider. Primary care or specialist office visits, for this plan, it's covered at 4 visits per person per year. There is no copay for that. There is no out-of-pocket. As long as you're going in network, you have 4 visits with a primary care physician or a specialist physician per year, covered at 100%. Diagnostic imaging or lab services that can include x-rays and blood work, that's covered with 3 visits per person per year. Emergency room visits is covered at 3 visits per year. But please note, if you take this plan, we've noted it multiple places on this document, it does not cover inpatient or outpatient hospital services. So you really want to be certain when you elect this plan that you understand that component of it. Now, Onboard does offer some ancillary benefits through Colonial Life. and they do have some limited hospital coverage plans that you could add in relatively inexpensively if you took this plan to your MEC Blue option. And so if you elect this plan, I would absolutely make it a point to speak to a Colonial Life counselor. They can walk you through some of those options because given how reduced the employee contributions are for the MEC Blue, you can still very affordably elect this plan as well as a limited hospital benefit to really adjunct the network-based MEC Blue option. So something to keep in mind. You don't have to do that, but it's something I'd recommend just to ensure if you have something that's unexpected that does require an inpatient hospitalization, you do have some level of benefit if you decide to take this plan. Prescription drug services. So that is covered. Again, it's limited, just like the major medical options, but you do have generic coverage at a $5 copay. For brand medications, it's covered at a $40 copay, and it's limited to 12 prescriptions per person per year. And that is 12 total prescriptions, not necessarily 12 different drugs. If you're on a monthly maintenance drug, let's say for blood pressure or cholesterol, this plan would essentially allow you to have that one drug every month, and it would be covered under the plan at either a $5 or a $40 copay, depending on whether it's generic or preferred brands. If you had multiple drugs every month, then you could potentially use up this benefit earlier than the full year. So you just want to be mindful of that if you do elect this plan. There are some options in the event that you exceed your benefit for the year. If you get 6 months in and you've already used up your 12 prescriptions per person per year, GoodRx, many of you are probably familiar with that. I've used that myself many times. GoodRx is a great service that gives you discounts on drugs. I wouldn't necessarily use that while you still had your 12 prescriptions for the year, because the plan covers them at a low copay. But if you ever did exceed 12 and you were on this plan, GoodRx may be a good option to pursue. The next plan we're going to talk about is called the Affordable Care Plan. And this is called the Affordable Care Plan Option 17, or ACP 17. So this plan works a little bit differently than some of the more traditional plans we'll talk about shortly. This plan has a deductible of $2,000 for individual, $4,000 for family, but it does not apply with every benefit. You'll notice as you kind of go down this list here, primary care office visits are covered at 100%, deductible waived, as is specialist visits. Really your physician services. So if you went in for a standard office visit, specialist visit, chiropractic care, it would be covered at 100% deductible waived. But you'll note, we reference here that it's covered at 100% of the Medicare rate. How this plan works is it's a pure non-network arrangement. It means there is no PPO network, no Aetna, Cigna, Blue Cross. We just talked about multi-plan in the prior plan. Those are PPO networks. This plan does not have a PPO network. What that means is you can use any physician that you choose, but you have to be proactive in confirming benefits first. All you need to do is hand them your ID card, just like you normally would, but you need to ask the question, will you accept this plan? They'll confirm benefits with Allied, and we'll explain how the plan pays, and they'll decide whether or not they'll accept it, and if they'll accept it as payment in full. How this plan is paying providers is at the Medicare rate. So it doesn't mean you're on Medicare, but it means that we're paying physicians, hospitals, any providers under the plan using the same rates that the federal government does for someone who's over age 65 and on federal Medicare. So typically what we know is more than 70% of physicians across the country and hospitals accept federal Medicare. And this plan is paying providers at the exact same way. So we don't normally run into issues where providers push back on it, but it's possible. And the times when that can happen is if you go in and you don't confirm benefits in advance. The last thing you want is to be caught with a bill that you weren't anticipating. I've personally been enrolled into this plan for the last 5 years now. I see a chiropractor every month. I had this discussion with him 3 or 4 years ago. I asked the question, would you take my plan? It pays at Medicare. And he said, well, I take patients that are on federal Medicare. If this plan pays me the same way, I'll accept it. And I've never paid $1 since I've seen him. But again, the risk that you face with a plan like this is that if you don't confirm benefits in advance, and you do go to a hospital and you have a large bill, and the plan pays at Medicare, if they don't accept it, they can bill you the difference. That's what a balanced bill would come up. And you absolutely want to avoid that, and the best way to do it is to confirm in advance of service. There are other options that we're offering this year, so if that idea is something that you're not willing to navigate, there are absolutely other plans that you can elect. I personally like this plan because it allows me to go anywhere, but it is incumbent upon me to ensure that I confirm benefits before I have services rendered to ensure that I'm not caught with a large bill. Teledoc is also embedded here. Medicare does not play any role with Teledoc, so you're just using the service the same way as we talked about in the prior plan. There's no fee for that. It's completely free to use. And then the prescription drug benefit is illustrated below. That's a traditional pharmacy arrangement with a traditional copay model. $5 for generics, $40 for brands, $60 for non-preferred brands. That's for a 30-day supply. We note CVS Caremark. It doesn't necessarily mean you have to just use CVS pharmacies. You can go to virtually any pharmacy that you choose. CVS Caremark is the pharmacy benefit manager, but their network of pharmacies, I've rarely, if ever, seen a pharmacy that's not included. Walgreens, Duane Reade, Rite Aid, Walmart, Target, they're all included in the network. Throughout this benefit guide, towards the end, we do include a frequently asked questions section that's specific to this plan. Because this plan is very different, we want to ensure that anyone that elects it does have a good understanding. It's a very brief document. I would encourage everybody just to read through that briefly, just to be sure that you understand exactly how this plan works before you elect it. The PPO PHCS plan, so this is a new plan that we're offering. This plan is designed to have benefits that are similar to what we just looked at from a deductible standpoint, but it uses a PPO network. And the PPO network is the PHCS network. PHCS is a national network, but this does ensure that you don't have to have any fear of being balance billed in the event that a provider won't accept a plan that pays at Medicare, like we talked about on the prior plan. So if you take this plan, you just need to remember, I have to make sure I'm using PHCS contracted physicians and hospitals, and then you don't have to think about anything after that. That's the most important piece. Again, this plan's benefits were designed to be very similar to the ACP, except include a network. So I won't go through all of these benefits line by line, but you can see each benefit noted here. And again, the most common benefits, deductibles, out-of-pockets, physician services, we do have a copay structured for that, so it's a $25 copay for an office visit. Specialist visits are $35. Teledoc is included. This plan does cover emergency room, hospital services, urgent care, and then does have a traditional pharmacy benefit. Next, we're going to talk about the 3 Cigna PPO plans. So, Onboard does offer 3 PPO buy-up options. The first is the EPO High Deductible Health Plan. This plan is designed to be a compliant high deductible health plan that is HSA eligible. If an HSA is something that you're interested in, it's a health savings account, it is something you have to set up with your own bank. But that does allow you to set aside dollars on a pre-tax basis designated for healthcare expenses. If that's something you're interested in doing, you can absolutely speak to your bank about it. Many banks across the country do have HSA options that you could open, and this plan qualifies for it. It's an IRS requirement that the plan has certain deductible amounts and is structured in a certain way to be an HSA eligible plan, and this plan meets that criteria. This plan is a $2,800 in-network deductible for individual, $5,400 for family. Routine preventive care, again, on every plan we talk about, in-network, is covered at 100%, deductible waived. Primary care, specialist visits, emergency room, hospital services, and urgent care are all covered at 50% coinsurance after you meet your deductible. And then for this plan, the prescription drug benefit, and again, this is because this is a qualified high deductible health plan, all services except routine preventive care have to go to deductible first to be HSA compliant. So even for the prescription drug benefit, you have to meet that $2,800 deductible before the plan starts paying. Once you meet your deductible, prescriptions are covered at 50%. And then any coinsurance you pay after this deductible is met is $2,800, tracks to your $4,000 out-of-pocket maximum. Once you meet your out-of-pocket maximum, the plan covers services in-network at 100%, both medical and pharmacy. The next plan we'll talk about is the EPO Middle Plan. Again, this is also offered with the Cigna Network. This plan has a $1,500 in-network individual deductible, $3,000 per family. The out-of-pocket maximum is $4,000. And then as we go down the list, we can see certain benefits do have copays associated with them at the in-network level. Primary care office visits are at a $20 copay, specialist visits are $40, emergency room is $100, urgent care is $50, hospital services, both inpatient and outpatient, are covered at 70% co-insurance if FEMA plan pays. You would pay $30 after your $1,500 deductible is met. And this does have a traditional copay model for your pharmacy benefits. You'll notice that this plan does not cover, and this is true of the prior plan as well, when we say EPO, most of us are familiar with the term PPO network. And EPO just means it stands for exclusive provider organization. And all that means is that you have to use in-network providers. So if you took this plan, you'd have to use Cigna. There are only a few scenarios where any out-of-network benefits would be covered. One is for the emergency room, because you obviously can't choose to go to an in-network emergency room. If it's a true emergency, you're going to go to the closest ER you can find. The other times whenever you would have coverage at an out-of-network level is if you went in for a hospitalization. Let's say you went to an in-network hospital, but they brought in an out-of-network anesthesiologist or pathologist. That's common. In that scenario, we don't penalize you for that either. The design is that you use in-network providers whenever you have the opportunity to. And then lastly, the PPO buy-up plan. This is a very comprehensive plan, which is why the employee contributions are much higher for this option. Most often, we don't see these types of plans exist in the market anymore. They are very comprehensive. This plan has no deductible. It's $0, both for individual or for family. Several benefits do have a traditional copay arrangement, but hospital services is covered at 100% in-network. It's a very, very robust plan. And that's why the employee contributions are much higher for a plan like this. In most cases, I don't know if it would make as much sense to elect a plan like this at this contribution level, unless you know you can anticipate throughout the plan year that you're going to have much higher than typical medical expenses. The other plan options that are being offered are absolutely very robust as well. A plan that has no deductible, not necessarily a requirement to have a robust plan, but this plan is a very, very comprehensive option. Prescription drug benefits covered at a $10 copay for generics, $25 for brand, and $50 for non-preferred brands. And then this plan does include out-of-network benefits as well. Even with a plan that does cover out-of-network benefits, I still would always encourage everyone to go in-network whenever possible. The cost difference is just so significantly more competitive in-network versus out. So those are the major medical options offered for 2022. I won't go through every other page here in detail, but I do want to note everyone has access to this document. If you elect the PHCS PPO plan, we've included provider instructions here and how to define physicians that are in network. These are the online instructions. You can also call Allied directly if you're confused with the process, or if you just rather do this over the phone rather than on a computer. That's absolutely fine to do. These are the instructions for that. If you elect the MEC Blue plan, we've included the instructions on how to find providers in network for that option. And then if you elect any of the three Cigna options, we've included the instructions for that as well. Those are included here. Same story here. If you're more comfortable using or speaking to a customer service agent and walking you through this, you just need to provide the agent your zip code, the type of physician you're looking for, and they can help navigate this with you. As I referenced earlier, anyone who's interested in the Affordable Care Plan, the ACP-17, I would absolutely encourage everyone to read through these 3 pages here. It's very brief, but this is a good FAQ that just talks through how this plan works, how to navigate it. Again, I found this plan myself to be very easy to navigate. I just have to remember I need to confirm benefits in advance of service. If I do that every time, I'm going to be just fine. But if for whatever reason that doesn't sound like a plan that you want to elect, the PHCS PPO plan, the option right above this, is an option this year, a new option this year that's available for everybody, and at a very similar price point. The employee contribution is just a little bit higher than the ACP, so that's absolutely an option for anyone who's interested. We mentioned Teladoc earlier. Teladoc is included on every plan. Most employers, most of our clients, typically include a $50 copay for this service. Onboard is covering the cost entirely. There's no copay, there's no consult fee. I would encourage everyone who's on the onboard major medical plans, regardless of which plan you're on, take advantage of this service. It doesn't cost you anything. It's very easy to use. You just have to remember to use it. I'm guilty of this myself. Whenever you need it, if you have, something relatively minor, if you have a sick kid at home who has a mild fever and you think it's perfectly appropriate to speak to a physician or do a video conference with them rather than going to an ER or an emergency room or urgent care rather, Teladoc is always available. You're speaking to a doctor in less than 10, 15 minutes in most cases. It's very easy to use. What I would encourage everybody to do, if you haven't done this already, if you've never used Teladoc, when you just get your ID card in the mail, call Teladoc, because the first time you speak to them, they're going to spend about 10 minutes with you just going through a medical history. They need to know if you're on any medications or if you're being treated for anything before they can connect you with a physician. So you can do that before you actually need to use the service. And that way, whenever, let's say 2, 3, 5 months from now, you need to actually speak with one, you don't have to go through that medical history. So I'd encourage everybody to do that. It also helps ensure that it stays top of mind. Spend 10 minutes on the phone with Teladoc. Several months after the fact, whenever you actually need to use it, you may remember that it's available to you, and again, it's no charge. These are real medical doctors. Allied Care Solutions Behavioral Health, also a benefit that's included in every option that we talked about today. This is a program that is really for situations that are more appropriate for you to speak to a counselor as opposed to a medical doctor. These are licensed clinicians, and they're really designed to help you with things like anxiety, depression, grief counseling. There's a lot of great resources embedded with this program. Virtual visits are included, so either via the telephone or video conference on an unlimited basis, so you can speak with anybody as much as you like. If you prefer, if it's more appropriate for you to go in and see someone in person, there is 5 in-person counseling sessions that are included within this program as well. So that is an option on each medical plan we talked about today. And the phone number is going to be on every ID card, so you don't need to remember it, but try to keep this top of mind. It's a great service to take advantage of. Onboard does also offer flexible spending accounts. So for those of you that do want to take advantage of this, a flexible spending account is available for both medical and dependent care charges. Really what this allows you to do is to set aside dollars on a pre-tax basis that are designated for major medical expenses or for dependent care. If you elect the health care, so the medical expense FSA, you will get a debit card in the mail. And really what it allows you to do is set aside those dollars pre-tax, but they become available to you in full at the beginning of the plan year. So for an example, let's say I anticipated that I'd have roughly $2,000 worth of medical costs out of pocket that I would be spending in 2022. You can elect $2,000 up front during this open enrollment. You get a debit card in the mail once open enrollment is completed, so sometime in January. That debit card would have $2,000 available in it immediately for you to use. The $2,000 would then be deducted equally out of every pay period. So you get access to all the funds that you elect up front on day one, but it comes out equally over each pay period and on a pre-tax basis. The benefit is that you get the dollars up front. The potential negative to a program like this is that it's use it or lose it. If you do not use up those funds, let's say you over-elect, the IRS requires that you lose those dollars at the end of the plan year. So you have 2022 to use them up, and you need to be certain that you don't over-elect for this plan year. It's very, very important. The maximums for 2022 is $2,750 for your healthcare flexible spending account. There is a grace period that does allow you to submit claims that were incurred up to 2.5 months after the plan year ends. I always like to gloss over that because you need to make sure you just try to remember to get everything in before the end of 2022. You don't want to be cutting it close and end up losing those dollars. Dependent care is also an option here that does give you the ability to set aside up to $5,000 for dependent care services. That would include daycare, nanny, just a variety of services that could fall under this. This does not have a debit card. It does not work in the same way as the healthcare FSA. This is pay as you go. However, it does still give you the tax benefits for having this done on a pre-tax basis. So if you're interested, absolutely read through this and then try your best to determine what a reasonable amount is to elect. Allied's portal, we've included details here. And so anybody who's elected on any of the major medical plans or the FSA, absolutely register for alliedbenefit.com. You can check your claim status, check your deductible amounts, pull a copy of your full plan document once you're in the new plan year. If you ever forget your ID card, let's say you need to get the prescription filled, all you need to do is log in and pull up your ID card. You can hand it right to the pharmacist, and it works the exact same way. So absolutely, I'd encourage everybody to register for that if you haven't already and you're currently on the plans. You can do that now. If you're electing for the first time, as soon as you get your ID card in the mail, I would absolutely register and set up your account. And then lastly, customer service hours are illustrated here at the Eastern time zones. If you have a question about claims, the plans, anything associated with your healthcare coverage or FSA coverage, please feel free to reach out to our customer service team. They're there to help anybody with questions about the plans. Thank you so much for the time today. If there's any questions, I know Onboard has set aside a way for reaching out directly to the HR team if you have any questions throughout the open enrollment. Thank you very much.